Okay, first, what we're going to do is talk about bullish candles and what that means. Then we're going to talk about bearish candles, what that means. And then we're going to talk about support and resistance, what that means and how we use it. And then participation and protection. Those are two concepts that are extremely important. That's how you're going to find opportunities when you're going to take action on something, and then it's going to, and then protection is going to tell you how to protect yourself. So first, we're going to talk about bullish candles. Secondly, we're going to talk about bearish candles, what that means, then support and resistance, and then two P's, participation and protection. Participation is when do you take action? When do you pull the trigger? Or what people like to say is, when do I get in? And then protection is, how do you protect yourself? To me, that's more important than participating, is how do you protect yourself? How do you not lose more than you want to lose? So let's begin. So first, we're going to look at bullish candles. So let's start with this particular candle here. So this is a bullish candle. Every single candle has an open, a high, a low, and a close. There are actually 6 parts of every single candle. So you have the body, the wick. You see this little bitty stem at the top. There's a stem at the bottom. That's the wick, and then you have the actual body. The body represents what the price did for a period of time overall. So whether there were price gains or there were price losses. And the wicks represent where the price went to but didn't stay. And the example that I like to give people for that is, let's say you are on the beach and you have your body in one place, and then you take 10 steps to the left, and then you walk back to where you originally were. What's going to be left in the sand is footprints. And so each wick that you see, it represents the actual where the price went but didn't stay. And that's very powerful to us as well, because it is, price did go to that particular point. So let's use a fruit, for example. Let's use a mango. So down here at the bottom, every bullish candle is going to open at the bottom and it's going to close at the very, very top. And then the bottom of the wick is going to represent where the price went to but didn't stay. And the highest point is going to represent where the price went to but didn't stay. And that whole entire candle, from the lowest part to the highest part, represents a price range. So every candle is nothing but a range. And what we're looking at here is the company GE, and we're looking at the weekly chart. So every single candle that you see here is a weekly candle. And my advice to you is to find long-term opportunities. This information can be applied to shorter-term opportunities, but I think that it'll be easier for you to find long-term opportunities. And so the platform that we're using right here is TradingView. And again, this is the weekly chart. So either use the weekly or the monthly. Next up, we're going to talk about bearish candles. What does that mean? Bearish candle is just the opposite. Bearish candle is going to open at the top and close at the bottom. And what it is communicating to you is that that's the price losses for that period of time. So if we're looking at the weekly chart, it's just telling us that this particular week, which was the week of April 15, 2024, is just showing price losses. And the very, very bottom is the low, and the very, very top is the high of that particular candle. Something you should know about candles is the high is always going to be at the same place. Whether it's a bullish candle or a bearish candle, it's going to be at the same place. What changes is the open and the close. Again, a bearish candle is going to open at the top and it's going to close at the bottom, and a bullish candle is going to open at the bottom and close at the top. Now, all that's happening here is buyers and sellers, right? When you see a bullish candle, there's just more buyers than sellers. When you see a bearish candle, it's just more sellers than buyers. That's all that's happening, and all of that information is being shown there. This is all the objective information that's available at any one time. I don't have to look to the news. I don't have to go on CNBC, Bloomberg, or any of that. This is the most objective information that you can get. When you go to the gas station to get gas and you drive by and you notice that the prices are either up or down, and then you go into the store and you need to get gas, there's only one choice. You have to pay the price. So this is what I look for. I'm looking at the actual price. All right. So next up, we're going to talk about support and resistance. What is that? What does it mean? And then we'll talk about how we use it. And I want you to think about each piece of this as an individual concept to study. Not necessarily think about, oh, what do I do with that next? We're going to get to that. We're going to put it all together, but think about and study each individual thing as objective as you can, and then we'll put the story together. All right. So one example I'm going to use here is ceilings and floors. Everybody, if you live in a structure, you have ceilings and floors, right? So at the top, I'm going to put a C for ceiling, and at the bottom, I'm going to put an F for floors. And what we call this is support and resistance. So at the top would be resistance, and then at the bottom would be a floor. What does that mean? How is it useful to us? Let's just use this ball here. So if you had a ball and it was hitting a floor, then it's reasonable for us to expect that it's going to bounce, right? So it's being supported by the floor. And the reverse is true. If we take that ball and we throw it to the ceiling, it's going to resist that particular ceiling and then fall back down. And so the markers are similar in that way, but we can identify that a support, we can identify a ceiling, we can identify a floor and support through the use of the candle. So that's what we're going to do next. So every single time, we're going to do support first. Every single time that you see a red candle and then a green candle, that's support. Every instance, I don't care where you see it, don't think about what happens next. Only think about, is it red and then green? All right? Here, that's support. 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 My encouragement is to just, the same thing I just did here, just do that over and over and over and over until it becomes unconscious. You want to be able to see this. You want to be able to spot it just like that. And that's why I want you to study each singular thing as one concept. Not what to do next with it, but just one thing until it becomes unconscious. Next, we're going to talk about resistance. Here's the easy part about this. Wherever you see support, you're likely going to see resistance as well because it's red and green, right? So wherever you see a green candle and then a red candle, just the reverse, a green candle then a red candle is some kind of resistance. I don't care where you see it. Green candle, red candle. I don't care where you see it. That is resistance. That is a ceiling, right? And think about this as, we'll talk about that as a singular concept. So you'll be able to easily identify resistance, resistance, resistance. Everywhere you see green then red is resistance. So now what we're going to do is talk about participation. When do you participate? When do you get in? When do you pull the trigger? When do you say, all right, it's time for me to press the button? Now, how much should you risk and so forth? Getting into how much you should risk on an opportunity. You never bet the farm. You never bet the house. I do want to talk about that really quickly. Let's say you have $100. You never risk the whole $100. You wouldn't even risk $50 of that. If you own 100% of a business, you would never risk 100% of your business on any one transaction, so you wouldn't do this here. You would never risk 50% of your business on any one transaction, so you wouldn't do this here. 25%, you wouldn't do it. 5%, you wouldn't do it. But 1%, then that means you can fail. You can lose 1% of your business and still own it and still take more risk. And so this is no different. And so that risk management piece is very, very important, and I don't want to leave that out. But when do you participate? When you have a green candle followed by a red candle, and then you have a green candle, very important piece, that closes above the resistance. So this candle is the close. I'm going to put a line here to indicate the actual close. Again, the company that we're looking at right now is GE, and we've gone back a little bit in time, but you'll be able to do this on any company on a weekly time frame, monthly time frame, and you're going to see opportunities. And again, you're going to test this for yourself. And you're going to prove it to yourself with actionable information. Okay, so wherever you see a green candle followed by a red candle is resistance, right? And when you see a green candle that closes above that resistance, that is your participation. That is where you pull the trigger. That is where you already know how much you're going to risk. You've already decided that, you're looking at that, and you've been given enough time because every single candle is a week in time. So we know the week ends on Friday. So you're gonna know what you should do at Friday at 3 p.m. The markets are open. This is Central Time. The markets are open from 8:30 to 3 p.m. Central Time. So you know what time you know what time this weekly candle is gonna close, right? Because everything is nothing but time and price. So when you see that close above that, you're gonna be a buyer. You're gonna buy right there. So I'm gonna use a little line here to indicate that. That's gonna be your buy point. That's gonna be your participation. Let's find another one. This green candle, red candle. Did we have a candle that closed above it? Yes. You're gonna be a buyer right there. You're gonna be use your participation rule at that particular point. Very, very important. Very, very simple. I think we all can identify that. So there's a numbers fallacy. Oh, I'm not a numbers person. Well, if you have a bank account, if you can count to 10, if you know zeros and ones, you can do this. And this is just putting a line on a chart and being patient. So that is how you participate. So now we're going to talk about protecting yourself. This is very important. How do you protect yourself? I'm going to use a red line for that. What does this even mean? What does it mean to protect yourself? It is having a specific number, a specific place where you're going to exit out of the market. You can always get back in. You don't want to be in wishing you were out. You don't want to be, I would rather be out wishing I was in than in wishing I was out. All right. So you want to always have an area where you exit out of the market and limit your losses. All right. And so this is advice and education for those who are in this space. And it's going to be very, very helpful for the long term. So what do you use? You use what is called a stop loss. Stop loss is simple. It just means stop losing. Stop losing at this particular point. Remember where we talked about red then green as support? Red then green is a floor. Well, if something breaks a floor, then it's breaking that support, and that is telling us that the market has a higher probability of continuing to go down. And at that point, we can protect ourselves and exit out of the market. All right, so we're gonna put our stop loss under some kind of support every single time. So I'm just gonna delete this. And if this was our participation, then our protection is gonna go right under here. Super, super simple. This information is going to empower you. My passion is empowering other people. I love to do this. This is a dream of mine. I feel very lucky and grateful and blessed to just be doing what I love to do every single day. I think that love shows through how I share it. And I know this is going to be very, very helpful. And I invite you to a conversation. I invite you, if you have any questions about this, I would love to hear from you. I hope it serves you and your family well, and best of luck.